Welcome to the Deep Dive. Okay, let's maybe forget the usual advice about just saving money for a second.
Yeah, put that on pause.
Today, we're exploring something different. How to really shift gears and make your money work for you. Almost like becoming your own bank.
Right. We all hear save, save, save. And it's important, don't get me wrong.
Of course, foundational.
But here's the thing. While your money's sitting there, maybe earning a tiny bit of interest, the banks, they're lending it out.
Lending our money out and making good returns on it.
Exactly. And you get a fraction of that back. Sometimes a very, very small fraction.
So that's kind of the big question we're tackling today, isn't it?
It really is. Saving is step one, sure. But building real wealth, that often means thinking a bit more like the bank itself.
Thinking like a lender, an investor.
Precisely. It's about the strategic deployment of capital, as they say.
And that brings us to the core idea for this deep dive. We're drawing some insights from the book Building Wealth, Journey to Financial Freedom by Joseph Wakwoma.
A good source for this way of thinking.
The central question being, why let your hard-earned cash mainly boost a bank's bottom line?
When you could potentially direct it yourself into opportunities with, frankly, much higher potential returns.
So over the next little while, we'll break down how you might do that.
We'll talk about the mindset shift needed as key.
Then building that financial foundation, the vault, as the book calls it.
Your safety net, yeah. And then the exciting part, different investment options that could offer serious returns.
We'll touch on compounding too, how banks use that.
Oh yeah, the magic of compounding.
Oh.
Plus structuring your finances, almost like a mini institution.
And finally, protecting the wealth you build.
Can't forget that part.
All right, let's dive in. Step one, that mindset shift. What's the real difference between how a saver thinks and how an investor thinks?
Okay, so the core difference. It's really about the primary goal and how active you are with your money.
Active versus passive.
Pretty much a saver. Their main focus is usually security, preservation, keeping the money safe.
Right, building up that cushion for emergencies, the whole saving for a rainy day thing.
Exactly that. It's a defensive strategy in a way, which is fine, but it has limits.
So what about the investor?
An investor, well, they obviously care about security too, but they're proactively looking for opportunities. They want to deploy their capital.
Deploy it to make more capital.
Yes. Instead of just bracing for rain, they're, as the book nicely puts it, investing for a sunny future, aiming for growth, aiming for higher returns.
So it's moving from just holding on to money to actively trying to make it grow. And you mentioned thinking like bankers.
Absolutely. Banks are essentially both lenders and investors. Right? They assess risk, they look for opportunities, they expect a return on the money they put in.
They're not just sitting on piles of cash.
No way. They're making that cash work. So adopting that mindset means you start looking for ways to lend or invest your money directly, not just deposit it.
Okay, I get the shift in thinking. So practically speaking, what's the very first action step? It's not immediately lending money out, right? It's this vault.
That's right. Before you even think about investing, you need your own vault, your emergency fund.
The financial safety net.
Couldn't have said it better.
Yeah.
It's non-negotiable. This is what stops you from having to, say, sell an investment at a loss because your car suddenly needs a new engine.
Right. It protects your longer-term plans from short-term shocks. How big should this vault be? People always argue about this.
Yeah, there's some debate, but a solid guideline is having enough readily accessible cash to cover, say, 3 to 6 months of your essential living expenses.
Readily accessible, meaning not tied up in investments.
Exactly. A savings account, maybe a money market account, somewhere you can get it quickly without penalty.